the investments others make in our funds. It was an opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking cash infusion. I am here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school.
We are going to temporarily step away from this hearing on GameStonk stock trading, keep our over 40-year commitment to live coverage of Congress, continue watching online at cspan.org. U.S. House holding a brief pro forma session today. Back to the hearing after this.
We're trying to wield coercive power where it was inappropriate. And one of the key things that we would talk about, the reason I wrote Largest Enemies was for leaders in Washington, D.C. and around the country.
Okay, guys, sorry for the late intro into this live stream. I was outside shoveling some snow and I totally lost track of time. So what's going on right now is the live coverage of testimonies from we have Robinhood and Reddit co-founder, Marvel Capital, and so on, is giving their live testimonies about what happened with the market and Robinhood putting a hold on trading and some of the short squeezes that were going on, involving Robinhood and GameStop. So they've kind of stepped away here for a second. I'm just going through the notes, trying to figure out where we left off. It looks like I missed Vlad's testimony, along with we just got off the co-founder Steve Hoffman was just on. So they're continuing the hearing right now. They just stepped away from the live stream to cover another event. So it's from what I've caught, it's very interesting. We actually got an apology from Vlad, so that was huge. Said some key things there that I picked up on, like they held the line, and we picked up immediate capital. Was something that we didn't want to do was stop trading, but we didn't have the funds available to cover the clearinghouse, is what their excuse was. And immediately after, they picked up another $3 billion worth of assets. And he was pushing the issue that this is a good opportunity for us as a large power, financial power, to there's no excuse for us not to have live real market trading. Why are we going through clearinghouses type of situation? It should be point to point or person to person trading, like you see with a lot of cryptocurrencies and stuff like that. I'm assuming that's where he was going at, but he didn't come out and say it. So very, very interesting. Very to the point. Not a whole lot of remorse. Very, very straightforward. Oh, looks like we're back now.
At a time. If you are participating today, please keep your cameras on, and if you choose to attend a different remote proceeding, please turn your camera off. Today we will make an exception and allow members from Texas to participate without their video function if they are experiencing power outages that prevent them from having their videos working. If members wish to be recognized during the hearing, please identify yourself by name to facilitate recognition. I would also ask that members be patient as the chair proceeds, given the nature of conducting committee business virtually. So, this hearing is entitled Game Stopped: Who Wins and Loses When Short Sellers, Social Media, and Retail Investors Collide. I now recognize myself for 3 minutes to give an opening statement. Good afternoon, everyone. This hearing will be the first in a series of hearings for the
Looks like we're
committee
going to have a little bit of a
to
recap
examine
here.
the recent market volatility involving GameStonk and other stocks. I want to know how each of the witnesses here today and the companies they represent contributed to the historic trading events in January. This recent market volatility has put a national spotlight on institutional practices by Wall Street firms and prompted discussion about the evolving role of technology and social media in our markets. These events have illuminated potential conflicts of interest and the predatory ways that certain funds operate, and they have demonstrated the enormous potential power of social media in our markets. They have also raised issues involving gamification of trading, potential harm to retail investors, and the business models of apps with retail investors as their users. All of this is why we have witnesses from many of the key players here to testify today, including witnesses representing Wall Street firms Melvin Capital and Citadel, social media company Reddit, trading app Robinhood, as well as one of the retail investors involved. In subsequent hearings, we will hear from regulators and other experts regarding these events, including why Dodd-Frank rulemakings related to short-selling disclosures were never implemented. Many Americans feel that the system is stacked against them, and no matter what, Wall Street always wins. In this instance, many retail investors appeared motivated by a desire to beat Wall Street at its own game, and given the losses that many retail investors have sustained as a result of volatility in the system, there are many whose beliefs that the system is rigged against them has been reinforced. Others have noted that there are winners and there are losers in every trade in our financial markets. Our role as a Financial Services Committee is to ensure fairness in our financial markets and system, robust protections for investors, and accountability for Wall Street. Today, we will hear firsthand from the witnesses regarding these events. The hearing will be an opportunity for this committee to get the facts about the role each of the entities, the witnesses represent, played in the events we are examining today. Now, I recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 5 minutes.
Well, thank you, Madam Chair. And let me just begin by saying I believe Americans are far more sophisticated, informed, and capable than people in D.C. give them credit for.
Thank you.
When I called for this hearing last month, I wanted this to be a fact-finding mission.
Apes together.
We have speculation, we have headlines and finger-pointing, but we don't have the facts. We need facts, not just the salacious bits or nasty comments on Reddit. And look, there's plenty of that. We need the facts today. Now, some on the left are already floating new restrictions or things to, quote, protect these so-called uninformed retail investors who in their eyes don't know the difference between the DOGE coin and the Dow Jones without Congress telling them. I think if we've learned anything from the past few weeks, it's that these average everyday investors are pretty darn sophisticated. There is wisdom to the crowd. So let's zoom out on that idea just for a moment. The GameStop story represents a larger truth. A fundamental change is happening. Like never before, everyday investors can communicate, access more information, and work collectively to move markets, all in real time. Technology is fueling this revolution. Congress cannot put technology back in the box. GameStop is the culmination of years of pent-up frustration. That frustration is now paired with faster, cheaper, and better technology. Consider for a moment that for every story of someone being able to pay off their student debt from the GameStop trade, or conversely, every story of someone who lost money, there were stories of those who said they were investing in protest. In protest, they would gladly risk losing money just to prove a point. And now, and while no one should ever risk investing money that they cannot afford to lose, let's tell the truth of why someone would do something like that. The sad truth is the K-shaped economy is nothing new in our capital markets because the structural core of our regulations literally enshrined in equity.
Interesting.
Policies like the accredited investor definition blatantly pick winners and losers. If you're wealthy, you're good to go. And if you're not, you're deemed too dumb to be trusted with your own money. So a privileged few get to invest alongside Ivy League endowments, getting early access in private markets to the greatest returns of the last 2 generations. But not so fast for the average everyday investor. In the eyes of our government, you need to be protected. Protected from your own decisions, protected from your own money, protected from more opportunities. So you're left with a savings account which pays no interest. And if you need more money than that, well, we created a world where it's easier to go buy a lottery ticket than it is to invest in the next Google. Is it any wonder why the unhealthy dynamics of GameStop happened? It's time we get serious about equity and ownership in the American economy. We should live in a world where the construction worker or Uber driver trading on Robinhood has the same access to equity shares in Robinhood itself as the white-collar employees who work there. Same goes for Reddit and Reddit users, by the way. Both contributed
That would
to
be awesome.
its success. Why can't both share in its future success? So I'll conclude with a reminder for some of my colleagues who want to regulate more and more. In the 1980s, Massachusetts state regulators barred citizens from investing in what the Wall Street Journal called the latest in a cascade of stocks of high technology companies that occurred that year. What IPO?
Stimulus crypto checks. That would be awesome.
So instead of shutting the American public out through new regulations, new forms of taxation, or so-called protections, let's use this opportunity instead to side with them. So I'll begin where I started. Americans are far more sophisticated, informed, and capable than folks in D.C. give them credit for. And it's time our securities laws treat them that way.
Change. See some change.
And I yield back.
Thank you so very much. I'm so pleased that you are cooperating today and you were eager to join with us when we called for this committee. So I want to welcome today's witnesses to the committee. Mr. Vlad Tenev is the Chief Executive Officer of Robinhood Markets Incorporated.
So this is a recap. This has already happened. Unfortunately, I was outside shoveling, so it's nice that I'm getting a little bit of a recap here.
Restricted trading of those stocks for a period of time. Mr. Kenneth C. Griffin is the Chief Executive Officer of Citadel, LLC, a fund which is one of Robinhood's main customers and sources of revenue, which also provided financial support to Melvin Capital Management, LP, when Melvin faced significant losses over GameStop and other trades. Gabriel is the Chief Executive Officer of Melvin Capital Management, LP, which held a significant short position in GameStop and other stocks and experienced significant losses due to its positions. Steve Huffman is the Chief Executive Officer, co-founder of Reddit, a social media platform which is home to the subreddit Wall Street Bets, where retail investors discuss trading.
I can't believe this is a thing, man.
Discuss the purchase of GameStop and other stocks which experience volatility. Mr. Keith Gill is a retail investor who posted on Reddit and YouTube regarding investing in GameStop.
I'm still using Robinhood. You know, unfortunately, I'd love to transfer out, but I'm still using it right now.
Is a director of financial.
So I hope this goes well for Robinhood, just so I can, you know, take my time transferring out.
Your written statements will be made part of the record. Each of you will have 5 minutes to summarize testimony.
Chairman here. It was I believe that there are only 3 minutes of Democratic opening statements, with the idea that the subcommittee chair on the Democratic side would be called as well. That's what I was told by your staff.
Well, thank you very much. If that is the order that has been organized, I will cease my introductions and I will call on you, Mr. Sherman, to please go ahead and make an opening statement. Thank you.
Thank you so much. Back in the day, the law school professor would create an exam where he'd weave together a story that would exemplify each of the issues in that area of the law. But never did the professor do it as good a job as the GameStop saga, which identifies most of the issues facing our capital markets. Short selling. Could there be limits or required additional disclosures? What do we do with market participants, whether they be on Reddit or on Wall Street, who are shorting a stock or buying a stock for the purpose of influencing its price? What is this payment for order flow model, and what does it mean when some participants get best execution and some get enhanced best execution?
It all needs to change. It all needs to go away.
Price enhanced best execution. And all traders being treated fairly, and is payment for order flow free to the consumer? We need to look at the plumbing, where it takes 2 days to settle a transaction, but also why is it the broker's capital rather than the customer's capital that is posted during the 2-day period? And finally, we need to look at the gamification and glorification of high-frequency trading. I thank the chairwoman for the time, and I hope that in the months to come, we have several hearings to explore these issues, and that we're able to pass legislation this year to deal with each of them, and I yield back.
Thank you. The chair now recognizes the chairman of the subcommittee of Oversight and Investigations, the gentleman from Texas, Mr. Green, for 1 minute.
Thank you very much, Madam Chair. I greatly appreciate the opportunity to express some concerns that I have. It is a fact that Citadel Securities has paid over $100 million in penalties. And my concern is this.
Not enough, in my opinion.
It deals with whether we can allow a market maker's profits from misleading clients and improperly trading ahead of clients to become something as simple as the cost of doing business. The risk of punishments for violations must always exceed the rewards to deter the risk. I'm concerned, and my hope is that we'll get some additional intelligence on how these punishments have impacted the rewards that have been received. I yield back.
Thank you very much. And I will go back to the introduction of our witnesses. I left off with Jennifer Scott, Director of Financial Regulation Studies at the Cato Institute. Without objection, your written statements will be made part of the record. Each of you will have 5 minutes to summarize your testimony. You should be able to see a timer on your screen that will indicate how much time you have left. And a chime will go off at the end of your time. I would ask you to be mindful of the timer and quickly wrap up your testimony.
Don't
if
go
you
over.
hear the chime. Now, before we begin with your oral testimonies, I would like to swear in the witnesses. I will call each of your names individually to respond. Would you please raise your hands? Do you solemnly swear to affirm that the testimony you will give for this committee,
A little over-exaggerated there.
now under consideration, will be the truth, the whole truth, and nothing but the truth, so help you God? Mr. Tennell?
I do.
Mr. Griffin?
I do.
Mr. Plotkin? Mr. Plotkin?
I don't think he wants to.
I apologize. I do.
Thank you. Mr. Huffman? Mr. Gill?
Do.
Ms. Scott?
do.
Thank you very much. Let the record show that all of the witnesses answered in the affirmative. We will now begin with their oral testimonies. Mr. Tenab, you are recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, members of the committee. My name is Vlad Teneb, and I'm the Chief Executive Officer and co-founder of Robinhood. Thank you for the invitation to speak about Robinhood and the millions of people we serve. Almost 8 years ago, Beju Bhatt and I founded Robinhood. We believed then, as we do now, that the financial system should be built to work for everyone, not just a select few. We dreamed of making investing more accessible, especially for people without a lot of money. The stock market is a powerful wealth creator, but half of U.S. households participate in it.
Mr. Staff, I would like you to use your limited time to talk directly to what happened January 28th and your involvement in it.
Certainly.
Madam Chair, the witness has the opportunity to give their own testimony.
Excuse me, you are
Here's
not
your time for your questioning.
You are not recognized, Mr. Please go right ahead and speak directly to the question.
McHenry.
Mr. McHenry, yes, of course.
We created Robinhood to economically empower all Americans by opening financial markets to them. I was born in Bulgaria, a country with a financial system that was on the verge of collapse. At the age of 5, I immigrated with my family to America in search of a better life. I have benefited from all America has to offer, and Robinhood's mission to democratize finance for all has a very special significance for me. Robinhood's platform allows people from all backgrounds to invest with no account minimums and 0 commissions. Contrary to some very misleading and highly uninformed reports, we see evidence that most of our customers are investing for the long term, with features like fractional shares, dividend reinvestment, recurring investments. Our customers can start with small amounts and grow their investments in blue chip stocks and ETFs over time. We've always recognized the responsibility that comes with helping people invest. We'll continue to enhance our educational platform to help customers no matter where they are in their financial journey. Hundreds of free educational resources are available to everyone on our Learn website right now. While markets fluctuate, this tells me our business model is working for everyday Americans. The total value of our customers' assets on Robinhood exceeds the net amount of money they have deposited with us by over $35 billion. This tells me our business model is working for everyday Americans, the Robinhood community. Many people say that Robinhood has helped them to pay car loans, reduce student loan debt, meet daily bills, save for the future, and we're proud to serve them. You've invited me today to discuss the events of last month, and I welcome this opportunity. In late January, many brokerage firms saw a massive increase in trading activity in a handful of stocks. Prices were moving dramatically day to day, even hour to hour. One specific day, January 28th, proved to be a completely unprecedented event. The spike in trading activity and volatility meant that Robinhood Securities, our clearing broker, had to hold the line and post additional firm capital as collateral to support our clearinghouse deposit demands. To put it in perspective, on January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities, along with many other firms, imposed temporary trading restrictions on certain securities. We began allowing limited buys of these securities the following day, and we have since lifted the restrictions entirely. There are 2 points I want to make clear about these temporary restrictions. First, Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest. Second, Robinhood immediately secured additional funds. Altogether, through capital raising and other measures, we've increased our liquidity by more than $3 billion.
He said he was sorry.
Ourselves against increased collateral requirements and related market stress in the future. Despite the unprecedented market conditions in January, at the end of the day, what happened is unacceptable to us. To our customers, I'm sorry and I apologize. Please know that we are doing
That's the first time. That's the first time he's done it.
This won't happen again. And I want to highlight one more thing. The existing 2-day period to settle trades exposes investors and the industry to unnecessary risk. There is no reason why the greatest financial system in the world cannot settle
right on, man.
Trades in real time. I believe we can and
need change
to deploy our intellectual capital and our engineering resources to move to real-time settlement. Together, we can solve this. Before I close, I want to sincerely thank the millions of customers who continue to use Robinhood to access the markets every day.
You put it out there, man. That'd be huge if we could see some serious change in real-time price and action.
Mr. Griffin, you are now recognized for 5 minutes to present your oral testimony.
Griffin Waters,
this will be interesting.
Distinguished members of the committee, thank you for the opportunity to testify today on the recent market events. The U.S. capital markets are the envy of the world. Our nation's ability to allocate capital to its best and highest use creates jobs.
Get ready for the sob story and the I'm just an average person spiel.
Retail investors play an important role in our capital markets. According to Gallup, about 55% of Americans own stock right now. Citadel Securities, as the largest market maker in the U.S. equities market, executes more trades on behalf of retail investors than any other firm. As I will discuss shortly, Citadel Securities played an important role in meeting the needs of retail investors during the week of January 24th. Before doing so, I want to be perfectly clear. We had no role in Robinhood's decision to limit trading in GameStonk or any of the other meme stocks.
No, we just funded them 40% of their working capital to start. That's all. No big deal.
Announced. All of us Citadel Securities are committed to the healthy functioning of the U.S. equities markets. Now, I first participated in the financial markets as a retail investor. In the late 1980s, while attending
he's just
college,
an average guy.
I traded stocks and options from my dorm room. My passion for investing led to my founding of Citadel in 1990. Today, Citadel is one of the world's leading alternative investment managers. Our capital partners include pension plans, colleges, hospitals, foundations, and research institutions. In 2002, my partners and I founded Citadel Securities. Today, Citadel Securities is one of the world's preeminent market makers. We've been a leader in using technology to transform our markets, particularly for retail investors. Citadel Securities invests hundreds of millions of dollars each year to serve the needs of our customers.
I lose hundreds of millions of dollars because of GameStonk.
In January, the importance of this investment was on full display. During the period of frenzied retail equities trading, Citadel Securities was able to provide continuous liquidity every minute of every trading day. When others were unable or unwilling to handle the heavy
Look at this guy. He can't even read from a teleprompter, let alone,
on Wednesday, January 27th.
Got no remorse. He's trying to save his ass.
7.4 billion shares on behalf of retail investors. To put this into perspective, on that day, Citadel Securities executed more shares for retail investors than the entire average daily volume of the entire U.S. equities market in 2019. The magnitude of the orders routed to Citadel Securities reflects the confidence of the retail brokerage community in our firm's ability to deliver in all market conditions and underscores the critical importance of our resilient and stable systems. I could not be more proud of our team at Citadel Securities. My colleagues who were committed to ensuring that the interest of America's retail investors
that's great.
were served during this extraordinary period. Once again,
you think the
I
U.S.
appreciate
government would
the
have some
opportunity to appear today,
better feed
and I
rate?
look forward to answering your questions.
Thank you, Mr. Griffin. Mr. Plotkin, you are now recognized for 5 minutes to present your oral testimony.
This will be rich.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading
He's just an
activity
average everyday guy as well.
I'm the
We'll
founder
watch.
and chief investment officer of Melvin Capital. I'm humbled by these unprecedented events. Many investors on all sides have experienced losses. I am here today to share my own personal experience and to be helpful.
Look how empty his office is. There's nothing in there.
Part of the focus of this hearing is the decision of stock
TV's
trading
missing off the
platforms to limit
walls.
trading
They've had to
against
sell
stock.
everything.
I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platform decisions. In fact, Melvin closed out all of its positions in GameStop days before the platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. It was an opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time. But we always had margin
2.5
access,
billion.
and we were not seeking a cash infusion.
Just happens to be
I'm
the
here
almost the
testifying
close to the
today
same
far
amount that
removed
they
from my
lost.
background. I grew up in a
Interesting.
middle-class
Just
family in
happens to
Portland,
be,
Maine.
you
I went
know,
to a public high school.
We are going
Bullshit.
to temporarily step away from this hearing on GameStop stock trading to keep our over 40-year commitment to live coverage of
Come on.
Continue watching online at cspan.org. U.S. House holding a brief pro forma session today. Back to the hearing after this.
Oh, that's unreal. Yeah, no, Citadel didn't bail them out. They just happened to give them almost the same exact amount of money that they were losing because of GameStop. Yeah, just a coincidence, you know. Yeah, $2.5 billion investment into Melville from Citadel. Yeah,
House
just
will be in order.
coincidence.
The prayer will be offered by Chaplain Kibben.
Unreal.
Would you pray with me? God, you thunder wondrously.
None of that. Yay. Hopefully they'll come back. I'll get some updates and I'll share with you guys. But you know, just the testimonies that we got to listen to right off the bat there. You know, I was, you know, felt good about what Vlad had said. I do think that they're all lying through their teeth and they're all trying to cover their asses. But that's the whole, you know, it's the whole part of the game. Yeah, so no stimulus. It'll be interesting to see how everything turns out once the hearing has been conducted and commenced, and everything is wrapped up. But like I said, you know, Vlad had, you know, he came out and said sorry for the first time. You know, Citadel said they had no holdings to Robinhood, which we know, we, you know, can all pull up the information, you know, and same with Melville. You can't tell me that two companies that have such a large stake in a brokerage firm, you know, are going to try to pull some strings to cover their asses. You know, it's I'm hoping that you know, the courts and once all the testimonies are done, that the evidence will speak for itself, and we'll get a chance to see where this whole thing goes. It's going to be. I don't think this is going to be the end of it. It's definitely going to be a long road to see where it takes us. I hope that this incentivizes some of the institutional money and some of the other brokerages, maybe the SEC, to start implementing changes in the way markets are controlled and markets are traded. One of the things that Robinhood, Vlad was saying with Robinhood was the reason they stopped trading was because they didn't have enough liquidity in their clearinghouse to cover the trades. And then just the next day, the following day, they had that $3 billion of liquidity so they could reinstitute trading. It had nothing to do with the fact that millions of people across YouTube and Reddit and Twitter were bashing him and bashing Robinhood. No, it had nothing to do with that. It was the fact that he didn't have the money. There's no way a clearinghouse would stop trading like that, in my opinion. If you see that much influx in trading activity, you see that much spike in demand, why would you stop something that makes you money? Robinhood boasts, that they're a free trading company, but they're not. If you pull up your history, there are transaction fees now. There are, small little increments, but it's spread out across the millions of users that they have. Think about it, 15 cents per transaction across 1 million people. That's, it adds up quickly. And, it'll definitely, hopefully this will open some eyes, and we'll get a chance to, really take back the markets and make it more accessible to retail investors. Just I'm a little upset they cut off Melville Capital's testimony right there at the end. I hope it'll pop back up. I'll do some digging, see if I can find it. I was able to find Vlad's testimony. I posted it on Discord, so if you want to go and check that out and read that, let me know. It's over there. There's a link in the description down below for anybody that wants to join the Discord conversation. Make sure you hit that like button, hit that subscribe button, and definitely hit that notification bell for when I go live again if something else pops up this weekend coming up. Thanks guys for tuning in. I'll catch you next time.